Are you thinking about buying in Florida, but you've heard insurance rates can be high? Or maybe you already have property and you want to make sure you're getting the best rate. Or what about flood insurance? Do you need it or not? My guest today is Charles Eberhart. He is an expert on all things insurance here in Florida. He is my go-to for all questions. So I'm excited to have him on this video today to share his knowledge with you. Let's dive in. Hi, Charles. How are you?
Hey, good morning. And yourself? Doing good and yourself?
Good, good. Well, it's
Good.
great to see you. And as always, you're an encyclopedia of knowledge when it comes to insurance. I'm excited to have you talk today about it.
Yeah, thanks for having me.
Absolutely. Well, I thought we could really just start off with, some of the kind of the things that I hear is that Florida's expensive right now. Is it getting more expensive, or do you think that it's getting more competitive here?
It's definitely getting more competitive. I mean, relatively expensive to other states, but kind of what we're seeing driving that more than anything is just inflation, the cost to rebuild, So we're having to put the coverage so much higher, for the structure because, we're putting the dwelling limit, that top main line of coverage. Um, at $300-400 a square foot in some instances, whereas years ago it might have been half that or maybe, a third less. So that's kind of in a lot of instances what's holding rates up. Um, so pound for pound, rates are definitely getting better. It's kind of, the easiest rule of thumb is the newer the house, the cheaper the insurance will be. The older the house, the more expensive the insurance will be. So, I mean, one of the best, the other factor out there too is flood insurance required or not? And really, it's as simple as that. What I would suggest people to do is if your lender, if you're working with a lender or if you decide you want flood insurance or don't, that's one of the first things to kind of check off the list. But it's a really pretty easy punch list, and you can actually get quotes. I mean, we get quotes in 10 minutes. So if you with get in touch with a good agent. I mean, they can check the flood zone for you. They can run the quotes very quickly and let how accurate to expect them to be in terms of, hey, this, that, or the other might pop up, or we might get a wind mitigation inspection or something like that. And, here's what we're expecting to see. And with an experienced agent, you can get a high degree of accuracy with very little information. So if you are looking at an older property and you're concerned, just get a homeowner's quote. I mean, it takes just a few minutes, to get a ballpark. I mean, it's not going to be 100% accurate because systems are very sophisticated now. They're pulling in your personal information. There's a feature of the home one company or another doesn't like. But I mean, enjoy within, you're going to be within 10% usually of about where you start. And there might need be a little bit moving around. And that's all situational. Stuff comes up on inspections all the time. When you're buying a new house, something unforeseen, it just happens. But generally we're able to roll the punches and it's not really ever a deal breaker over the last few years. The only ones that we're seeing now that are, super duper hard to work with is just very very old roofs. Roofs over 20 years old. And over 15 is not easy per se, but you still have a shot. And that's a big indicator that the market's starting to get a little bit better because as of, a year or two ago, if your roof was over 15, it was, most agents would tell you it's pretty much impossible. But that's starting to open up a bit. Again, it is situational. It depends on the house, where it is, and
Mm.
what the roof looks like. But if it's an architectural shingle roof and it looks really good, you've got a shot to go longer. We used to could write them out as far as 25 years. But the market got real hard and that kind of made that more of a challenge. So there is a little bit more leeway. In terms of qualifying, it's a little bit easier. Rates are a little bit better. We expect that to continue, but um, you know, we'll see. Hopefully, we get through the storm season. With the really zero impact, and then the market will just continue to improve from there. I believe so.
Yeah, that's really interesting. So in terms of let's talk about the roof situation. So you were just mentioning the shingle roof. Does it matter if it's metal or shingle? Like, should people, what do people need to know about that?
Yeah, I mean, basically, a lot of times there's not a direct price difference or correlation from like, for example, some companies certainly do, but wind mitigation discounts are more commonly the price difference than the covering itself. Some companies give you a little bit of a credit for metal versus shingle, but it's not necessarily the industry norm from what I see. Um, but basically it's life expectancy. So, pretty much every carrier might say, hey, well, most companies will say, we'll take up to anywhere between a 10 to a 20-year-old shingle roof, depending on the company's eligibility guidelines at that time. Whereas everybody might say, hey, we'll take between a 20 and 40-year-old metal roof. So it just gives you a longer life expectancy. Um, and that's really all that it is so the good part about having a roof that has a longer life expectancy is you can shop around for a longer period of time, right? So if you get locked in and then now you're kind of you're with a shingle roof and now 7 years later it's 16 years old, it'll be harder to move that. It's not to
Yeah.
say that you're going to get canceled or yada yada. And but the other thing that's kind of coming is a lot of these, which it's kind of here already in a lot of instances, is um, most of these policies will have baked in basically a roof schedule to where after a certain age, and again, this is carrier specific, but after a certain age, the carrier won't pay for a brand new set of shingles. They'll pay a depreciated settlement or like a schedule. So basically, it'll say, um, the roof was 20 years old. So maybe they'll pay, depending on the condition of the roof, 60% of what a new roof would cost or something. And the schedule is published. So you
Yeah.
can see it, what it looks like. The metal roofs hold up extremely well on the depreciation tables I've seen. They seem to be the best. So the oldest, they pay out the highest, at the oldest roof kind of, in the schedule. So basically, they just don't depreciate as much or as
Hmm.
fast
Hmm.
from the schedules I've seen, which have only been a few. But it's going to be a thing to where the good part is we really won't have to worry about roof ages all that much anymore. They'll just say, hey, look, here's just the condition in the policy. The caveat is once it's over this age, we don't pay for a brand new one, which most people find agreeable.
Hmm. Yeah, it's always something when we're out showing property, and if the roof is on the older side, obviously, we work with an inspector to go in and assess the roof, right, on behalf of the buyer. But it's something that, if it's kind of borderline and it's not going to be insurable, then it's something that in the negotiation process we have to kind of address, right? And so that comes up, especially if people are looking at these older homes. So yeah. So let's talk about flood insurance because you
Sure.
and I have talked about this before, and could you just explain when it is mandatory and then when it is not mandatory, but you might want to do it, and also how it's not as expensive sometimes, right, as people think.
Yeah, I mean, so it's really only ever mandatory if you have a mortgage company. So that would be the only time that, if you have a mortgage and you're in what's called a special hazard zone, which is just kind of a standard flood zone, um, basically anything other than X, B, or C, we don't really, in our area, I mean, I think B or C is kind of phased out. I think it's all X now or X shaded or X 500 or one of those designations. I think B and C were used back, many years ago, and I don't think you see them at least in our area, we don't. But but yeah, so I mean, it's really only ever required if you have a mortgage and you're in what quote unquote most people would say a flood zone. Technically, every property is in the FEMA flood zone. It's just considered a hazard one or not, and required by a lender or not if you have one. So that's really where it is. With FEMA's new system, they kind of changed how they rate everything. So in many ways, it's a lot easier to figure out where the pricing is. FEMA actually made it to where we can just simply get their policy number and the name of the company that their policy is written through, and basically just put that on the new policy application and write the policy. And what it does, or even rather just quote it, and what it does is actually ports in a grandfathering sort of way, grandfathers the pricing within 18%. It's almost always right on the money unless there's coverage differences or um, deductible differences. There's a slight chance you could hit a rate cycle, to where like maybe after a certain date, like, the next set of increase happens and it shouldn't be more than 18%. Like I said, it should only happen one or two times a year. There's a slight chance that you get a slight bump on the rate. And a lot of policies have actually kind of topped out, meaning they should not go up unless FEMA changes top taxes and fees. So basically, you're kind of, and it'll say like your full risk premium, and essentially that in theory is kind of your what you would say a more actuarially sound number, meaning more sustainable for FEMA to kind of leave it there and set it and forget it and not have to hike rates. Um, the other thing that's interesting is with those changes in some properties, the price certainly has gone up. Some it's flat, it's plateaued, and some it even went down a little bit. That was more inland, not so much coastal. But the interesting part is we're seeing a pretty aggressive private market, meaning just private companies coming in, which is great because I mean, why not have competition? Especially with a lot of these changes and kind of some decreased litigation. And quite frankly, I mean, we need a lot more affordable flood insurance because a lot of litigation and these kind of statistics that look bad, when you're looking at how many claims that a homeowner's insurance company deny, probably most of them are flooding. So that's kind of the reality. If you look at it and you're like, sorry, but pretty much every homeowner's policy doesn't cover flood damage. There's a couple that do, but it's hard to qualify and it wasn't super risky or coastal, areas where you'd expect to see issues, which is why they would do it. But a lot of times, if you looked at like some statistics on amount of claims denied, my guess is the bulk of those are flood damage coastal areas where they just didn't have flood insurance, and you're just trying to report it, and it just clearly was a flood, you
Mm-hmm.
know. So that's unfortunate, and we want people to be able to get affordable coverage, for those properties for sure. But again, not to be, I mean, it's definitely all good news. I mean, we're seeing companies coming in, being more aggressive, saying, hey, we want to do business in Florida again. Very few companies that were saying it, and now everyone's pretty much got it figured out.
Mm-hmm.
Is that they want to be back in Florida, and kind of make a splash and start insuring again. And that competition will inevitably drive rates down. It's already started to. I can't remember the last time I wrote someone a policy for more money than what they were currently paying. Not even close.
Mm-hmm.
I mean, on home, auto, everything. I mean, everything. So, um,
So the rates are
I
going
mean,
down across the board for all insurances because obviously you do
well,
car insurance,
pretty
but you do
much.
everything. Yeah.
Pretty much, I would say flood it would be the exception to it unless you have like a private company that's getting aggressive, and that's a little bit more infrequent than like the homeowners market improving. Um, Umbrellas are still a little bit tricky, so your excess liability policy over all of your assets, that market. But we're talking about the difference between it's having a $400 policy going to 550 for the year, right? Versus like your homeowner's insurance going from 3,000 to 5,000. Big difference. So we're talking
Mhm.
about you know kind of the severity of stuff. It is being corrected already. There's still some other products out there. So I wouldn't say completely across the board, but for the area, those pain points, those areas where we've been, struggling and mostly home and auto, where we saw kind of the more severe rate increases over the last few years, those ones are starting to come down for sure. And not
Why is that,
necessarily,
Charles? Is that because more carriers are coming into Florida, or why would
yeah,
they be going down?
the tort reform. Basically, the state of Florida had some legislative change that they needed to do to cut a lot of silly business out, a lot of fraud, corruption, abuse, and just like solicitively provoked litigation,
Mm-hmm. Okay.
and basically the way the law was written in Florida was it basically just made, the insurance carriers a sitting duck and the only one with skin in the game. So, you know, there was just a lot of people that would just basically the way you could say it is um, people kind of going after insurance carriers, third parties primarily. Their mentality was just throw everything against the wall and see what sticks. And when you do that, the burden and the load on the carrier is, I mean, no carrier can really sustain that for all that long. And frankly, it's a testament to a lot of these carriers that we have. I mean, we don't have any bad companies in Florida. I mean, 4 years ago, we had decent companies going out of business. 3 years ago, we had good companies going out of business. 2 years ago, we had great companies going out of business. There's no bad carriers. Now we have new carriers coming in. So that's going to be something on the agency side that we kind of, keep an eye on, just ask them the hard questions, up front. Um, but I mean, outside of that, I mean, these are tried true. These are some of the most all the Florida domestic carriers. They're actually, well, a lot of them are expanding because they're so good, but they score higher on claim satisfaction than most of the national companies. Like
Mm-hmm.
Tower Hill, for example. I mean, they're in the top 10 in the nation. I think they started only in Florida. I believe they were Florida domestic initially, but I mean, they're like a 60-year-old company now or whatever it is.
Mm-hmm.
So, you know, the companies are excellent. So it really wasn't them. It was just this load. That was put on them that no other state has ever really, seen. And it was just a failure at the state level. And thankfully, they corrected it and we're kind of outside of that window of, those old things trying to be reopened and fought about. It's pretty much done and gone. I believe it's been over the 2 years now. So, that's really all it is. And then the thing that we're still kind of combating is inflation. So,
Mm-hmm.
being that that's kind of
Right.
gone, it's like great. But then if you kind of extrapolate things and look back at, you know, so like I did it on my own personal insurance. I was paying $800 a year for my house, home insurance. And then, now I'm at like $1,700 for the year, but the house is insured for double.
Yeah.
That when
Yeah.
I first wrote it, I mean, when I first wrote the policy for my house, I mean, I think it's like a hair under 1,800 square feet. I think I started with the coverage at like 200 and now it's at like 385, you
Mm-hmm.
know? And that's the minimum. I mean, that's, being conservative, so it's like um
Yeah,
it's
Charles,
kind of even it
y-
out.
yeah, can you go into the like how you come up with what needs to be insured? Because you
Yeah.
back out the land value, correct? And then you're insuring the rebuild costs of the home.
Right. Yeah, so we like, I mean, yeah, from a pragmatic standpoint, if we're confused about something, we do like kind of like look at the sales price and then we'll kind of look at the land value. But I'll tell you, the crazy thing is now, we're seeing people buying houses in Florida, you couldn't build them for the money.
Hmm.
I mean, so with that being said, you're looking at a property and you're sitting there going, well, they're paying 500,000 for this house, and I mean, it's a 2,200 square foot, not a chance in heck. I mean, the minimum per square foot, to build is probably $200 a square foot. You
Okay.
know,
Yeah.
I mean, that's probably the debt minimum. I mean, that's kind of what we use just as easy math and just to be safe. And yeah, maybe you have a little wiggle room depending on where the house is and this, that, and the other. But, we're kind of like starting there. And I mean, if it's, an updated house, if it's in a high-end neighborhood, it's going to be a lot higher of coverage needed for the property. So, I mean, to answer your question, the carriers have very, very good, sophisticated systems that pull information from the property appraiser site,
Hmm.
and from other sources to basically most accurately predict what it would cost to rebuild the house. The same stuff that claims adjusters and builders use to give you an estimate. So it's all kind of it's an insurance appraisal of sorts. But we have local knowledge too. Like if you're in a high-end neighborhood in town, that system will, I mean, you can tell the system, custom designer, what have you, to try and get it in line. But, some of the neighborhoods, especially the more high-end neighborhoods, you might need to kind of have a little bit more local knowledge to make sure you have the appropriate coverage. And what I mean by that is so sometimes it could be off by a little bit, and you just know that there's no builder building in there for under this number, and you just are saying, hey, now this appears to be high or low. And a lot of times the carriers will work with you. So but and all the companies inspect and they do another one. So basically you have two insurance appraisals, one by your agent and one by the company again as well.
Hmm.
But we are starting to see where that number is very close to where you almost couldn't even tell you backed any land value out
Oh,
because the
wow.
cost to build is just so high. Yeah, I mean, especially inland a bit, I mean, we're having to insure I mean, we've had properties that we're having to insure over, higher than the sales price just because it's a large house, and all these cost estimate systems are just saying the cost to build today would be more than what they're paying for it.
That's really interesting because it's almost like now it almost tells me as a realtor now's the time to buy because you're still getting, a lot of house for the price, right?
in
Based on what you're
certain
saying.
areas in certain areas for sure, especially like we're seeing it kind of more a little bit on the outskirts of town, I would say. You're starting to really see that.
Yeah.
um not so much kind of in the very coastal areas, to where, where it's like on the islands or this, that, and the other, we're not seeing. But then again, it's hard to say. It's so situational. You just have to look at the house, and I mean, but
Yeah.
yeah, there's definitely an opportunity out there, in terms of that, which seems like instant equity, in a way. But
Exactly. Yep.
I don't know. I mean, but I'm just on the insurance side, but we are seeing, to where, I mean, in many instances, like if we're looking at it and we're thinking, I mean, if you just want to quote, I might even just put it at the sales price if I'm not 100% sure, like we'll just put it on there and just say, hey, look, we can move this around a bit after, if you're just wanting a ballpark, if you're like, hey, just give me a general idea, we might just put it there because we're like, I think it might take more than this, but let's just,
Yeah.
get you a number here and then go from there. So, with that said, I mean, that's an observation we've had recently. Hopefully the cost to build comes down, but who knows?
Yeah. With inflation, I don't know about that. It's probably going to get more expensive.
Yeah, I, it could. I don't know, but yeah, we're seeing people kind of buying properties that were kind of pushing the line of having to even insure them for more.
Yeah.
So just an observation we've started to see. So
Has the underwriting process or the process of the carriers confirming the insurance changed? Because I had two of my own closings, and each time, one time somebody actually came out and walked the house. The other time I take photos of pretty much everything in the house to upload to their app. So they really are, seems to be like they're increasing their attention to detail when it comes to what they're insuring. Is that is that right?
yeah, there is. I mean, to some degree, yes. I mean, in other instances, like in some ways, yes. In some ways, no. I mean, it is true that most carriers, have pretty much said, "Hey, we're inspecting everything, regardless of the age." Whereas in years past, newer houses or like a house less than 10 years old, they might not even inspect it at all. Um, they might just look at pictures online. But now, they typically are at least sending someone to get a front and back picture. And if the house is over a certain age or over a certain value, they'll ask to come in and take pictures primarily of the plumbing. So
Mhm.
under the sinks, behind the toilets, the water heater, and the electrical panel box. Those are the main area, and then obviously the roof as well, but that's like from the exterior, right? And then also too, if the house is over 20 years old, they'll probably want to see a 4-point inspection done as well, done by a
Right.
licensed inspector. So the person that they send, the field inspector, after you write the policy, is also, while they're kind of like, you know, used as an affirmation for maybe if you had to send an inspection in, they're also looking for additional hazards like trees touching the house, you know, aggressive breeds of dogs, trampolines, skateboard ramps, big trip hazards, you
Uh-huh.
know, stairs without handrails, things like that, that don't come up often, but certainly could.
Mm-hmm. What would happen if they found something like that?
Just ask for it to be remedied, for it to be corrected.
Yeah.
And basically they'll send you a memo that says, hey, you have 2 weeks to respond and let us know what you plan to do. And then if you don't, or if it's unsatisfactory, then we'll put a 25-day cancellation on it. It's gotten a little tricky though, because I think the companies have a little bit less time than they used to. They used to have 90 days to kind of get through that. Um, but now they only have 60 days. So it happens a little faster, which is kind of good and bad. I mean, because basically, you close and then we just deal with it and then you don't have to deal with it. And a lot of times too, like if you're working with an experienced agent, they've kind of pre-underwritten it. So they've looked at everything and they're like, because quite literally what we do is we load up our software system that quotes all these companies, everyone that we have access to. And then basically we look at the property and we just say, who's the best fit? Which carrier option one is your best bang for your buck? And two, who are they going to get through underwriting with? And you hope to see, everything's pristine in terms of plumbing, roof, this, that, and the other, but it's not always the case. So with that said, there is some familiarity, and pre-underwriting, kind of pre-review that you need a good agent to do for you. Otherwise, you could have a little bit more headache than you're wanting to mess with. But again, it's all situational. I mean, some people, some buyers are just like, hey, if a problem comes up, I'll fix it immediately.
Mm-hmm.
Other people might say, hey, look, we're kind of stretching our budget, we might not be able to do all that much. But that's good stuff to communicate with your agent up front
Mm-hmm.
because you let us know the situation. So, yeah, you might spend a little bit more, but have a little less headache and give you more time to get in a better spot. Obviously, if we're your agent, we're going to advise you, what that price difference is. You
Mm-hmm.
know, we're going to say, hey, it's $200 more to kind of have a little bit more certainty and getting through without any sort of issue. Whereas if it's $2,000 more, we're going to be like, absolutely don't do that. Put the money in the house to get through on, you know what I mean? So where you can qualify with more companies because it makes more sense to put the money in the house than to overpay an insurance,
Mm-hmm.
right? Because you're going to need to do it eventually anyways, and it might make you put you in a better situation and your property more marketable, and that's what we want as an independent agent. We want you to be able to move laterally through the market so that when better options come, you qualify. So that's really kind of the strategy side that we as independent agents implement on your behalf.
Mm-hmm.
Um, and it's important to have someone that's probably been in the industry. I mean, not to say that there's not a bunch of great newer agents, I'm sure there are, or at least have a mentor in the industry or a connection, a network of agents that everyone's kind of communicating. Because if you've been in the industry, less than 7 or 8 years, you don't know what's coming because you've never seen the market, a soft market. We've been in
Mm-hmm.
basically a progressively hardening market, meaning options are leaving, no competition's going away. It's getting harder to qualify. But, when I first started in 2013, it was like the softest market we'd seen, since they had kind of a disaster 8 or 9 years prior to that. So,
Yeah.
um, but it's the best thing for everybody is to have the market get soft, make it easy to qualify, have a bunch of options. Everybody can kind of chill out a little bit when it comes to insurance. And it's been a long road. Unfortunately, it shouldn't have been this long. Really, the state should have corrected it probably twice as fast as they did. Um, I mean, I think they did as good as they possibly could. They did great, at the end of the day, they did everything that they needed to do. We just wish they would have done it years sooner.
Mm-hmm.
And we wouldn't have it wouldn't I mean, I guess now the good news is we have some perspective on, because back then, I mean, people used to think one thing and now we have some perspective and we're like, okay, well, this isn't so bad.
Yeah.
Moving forward and we've got some greener pastures. Um,
So
so that's
Charles,
kind of
we've talked about regular homeowners insurance just now. We've talked about flood a little bit. What about hurricanes? If something happened with a hurricane, obviously there's wind and there's water damage. Which insurance policy kicks in, or is there another policy people should be thinking about?
yeah. Um, in Northeast Florida, typically, the hurricane coverage is on the same homeowner's policy as your non-hurricane coverage. Your non-hurricane coverage, as we would refer to, is like the AOP, all other peril portion of the policy. So you'll see like a split deductible on the homeowner's policy. So you'll see like it might say $1,000 for the all other peril deductible, and then a lot of times it'll say the hurricane deductibles right next to it, and it'll say 2% of the dwelling limit. So if you have 500,000, the house insured for 500,000, that's a 10,000, 2% of that's $10,000. And that's a calendar year deductible, like your healthcare deductible. So it's not per storm. So like if you had damage in the one storm and the next storm causes damage again, you've already paid your deductible, you don't pay it again for personal lines policies. Um, so it's usually found on the same policy, and you'll see that the better the market is, you'll see that more and more policies will be the same. You won't have like a separate hurricane policy. The worse the market gets, as you get into certain areas like South Florida, you might see separate policies for hurricane and wind. You might go with like a Citizens or State Ran carrier. Um, but um, but yeah, usually like in a good market, it's one and the same policy. It's just different deductibles.
Uh-huh. Great. Okay. Now, another thing that I get from people that are not from here, they're wanting to buy in Florida, is they say to me, well, don't show us anything in a flood zone. We don't want to see that. And kind of what I'm saying to people is, just because it's in a FEMA zone does not mean it's ever been flooded, right? So that's why we also ask, if we can find out, has it been flooded before? What's the history? Is it really, what is the likelihood, right? Because, I don't want to not show them property that could be great. And then the other thing, Charles, is you set me up with a flood policy for my home, which was like $700 a year. I mean,
Yeah.
we're not talking about, thousands and thousands of dollars in some cases, right? So, what would you say on that for people that are saying, well, we don't want to buy in a flood zone?
Get a quote. The first thing to do is get a quote because it's nothing to necessarily shy away from. And frankly, I mean, it might be a good idea to look at some in flood zones because you know the whatever there's various things that might make it look less appetizing to which maybe you could take advantage of. It's so situational. So like nowadays, the the new FEMA system, one, you can grandfather with very little information, their pricing to yours. But it's not always the case. I mean, the general sense is the closer to the water the house is, like the river, the ocean, some sort of body of water, a marsh, chances are the price will be on the higher side than the lower side, but it's not always true. So, but you can very easily and quickly get a quote and just have the answer, right? So you get the quote for one, and that's your worst case scenario. Then two, you ask the seller, you say, "Hey, is there a current policy? How much is it?" And then basically you know two things. One, if that whatever the grandfather price is, it should start there and then go to where the quote is at 18% until it stops. So that's kind of the theory. So it's like you can grandfather the policy, and then if you were to get a quote today, that's essentially where the pricing stops increasing. In theory, ever taxes and fees could slightly affect the difference, but that's essentially the name of the game now. So it takes literally 2 minutes if you have the information to tell you now and forecast the FEMA basically, costs. The thing you can't really account for is, hey, when the private market starts to get more and more aggressive, are they like half? Sure, they could be. We don't know. That's something that we'll have to wait and see. But um, but yeah, so I would say just get a quote, and you'll have your answer. It's as simple as that.
Absolutely. Thank you for that. I would love to ask you a little bit about short-term rentals, Airbnbs, and things like that, because I know that we've talked about it before. There are different, obviously, there's a liability insurance. I mean, what is your advice to investors, people thinking about getting into Airbnbs right now?
Yeah, I mean, it really, so a lot of companies with the prevalence of Airbnbs, we're starting to see a lot more companies say, hey, yeah, we can insure them. In years past, uh, there might be two or three companies that would do short-term rentals, and whereas now it seems like there's probably a six, seven, eight companies that'll do short-term rentals, which is a great thing. It just gives you more options, so you're not just subjugated to like whatever that company's cost is. You have a little bit more, being shopped. With that said, it's starting to get easier, and a lot of times you'd be surprised, like, um, a lot of times that short-term rental endorsement is somewhere between like $50 and $200 more for the year is all. It's not like a huge surcharge to the policy a lot of times. You could see a big difference of like, hey, here's the best quote as a long-term rental, and then here's the best quote as a short-term rental. Yeah, you could see a large disparity there because like maybe it just so happens that the best price option as a long-term rental, like, and they don't do short-term rentals at all. They're just more aggressive in that area for, there could be a fairly sizable difference there. But if you have the same quote with the same company, that does do short-term rentals, it's usually not very much more to add that short-term rental coverage on there. So with that said, too, it could be that in your area, the most competitive company is the company that also offers short-term rental coverage. So you're actually paying the same or less than most other people anyways. So
Yeah.
it's really hard to say. We had that years ago with like electrical panel boxes. One of the most aggressive companies in our area, they didn't care. They didn't have they were like, we'll take any type of panel box. So like you're paying the best price and you didn't have to swap the panel box. It's just a silly comparison, but it's just some people were like, oh, they'd get it replaced and they'd be like, hey, we replaced the panel box and like we want our insurance to go down. And it's like, you've already been insured at the best option for like 5 years,
Yeah.
which is what
Yeah.
you want, you know what I mean? Because it just means that, it, it's no fun. I mean, for me as an agent, the way I look at it is if I look at a policy and I'm like, and we shop something and it's like, okay, um, $2,000 less for the year. That's what makes my stomach hurt because I'm just thinking, unless it shot way up and you had a great rate before, because I'm thinking of all those years you overpaid. You know what I mean?
Hmm.
So, with that said, and that's another thing that people get all upset about is like, if you see a large rate increase, yeah, it stinks. But, if your rate was stable and you had a great rate before and that company was just under, I'd rather see that because that means that you had a good deal for a long time. As opposed to being like, hey, you've been paying way over forever. That's what makes my stomach hurt. It's like, wow, like, I
Yeah.
can't believe, so like I said, there's just a little give and take there.
Yeah. So with a long-term lease, is it premiums are generally lower with the long-term versus short-term because it's more wear and tear on the property short-term? Is that right?
Um, yeah, I mean, in terms of like claims and stuff and things that we've seen, I mean, I couldn't say for sure if it's just, I mean, yeah, I mean, the assumption is, wear and tear, and there's just more, people going through the house, and you kind of have less of a relationship with them too, I would assume. So if you have a tenant that's, rented from you for 3 to 5 years, you probably know them and you probably like them. Otherwise, you probably tried to get rid of them or something like that. I would assume. I've never been a landlord, but you have something there, right? Whereas if you just have people from out of town and they meet someone and now everyone's at your place, I could see how it could get a little bit more promiscuous, in terms of someone possibly wanting to sue you or getting legitimately hurt or, something like that. So, um, that's what's driving it for sure, at least the concern for that. Um, and I mean, I certainly have heard there's more wear and tear on the house, but honestly, a lot of the people have really good property managers. And from what I've heard is that like the property managers do an incredible job screening stuff. I mean, they have all these protections. I mean, they can quite literally see how many Bluetooth devices are in the house. I
Right.
mean, I never even thought about it, but they're like, and they'll like show. I mean, I don't know. There's really interesting and creative and smart things that we've seen people do to protect their property from that sort of stuff. That a lot of the property managers kind of do, and even some homeowners do on their own, just kind of screening applicants and stuff like that. So, um, I'm not so sure there's a fair stigma around it for a responsible,
Yeah.
Airbnb renter, because I think they're probably real. I mean, the ones that I know that do that sort of stuff, I've never really heard of them having a problem. I don't
Yeah.
know.
Well, so within investment properties, you've got the homeowner's insurance, flood insurance if you need it, right? And then we have the liability, which is a third thing that we talk about. And that's kind of what you're referring to right now. If somebody gets hurt, if somebody tries to sue you or whatever, that's
Yeah.
when that policy kicks in, right?
Yeah, and usually the liability coverage is included on the homeowner's policy. So usually you'll have 300,000 in personal liability coverage with most companies. And then basically we'll recommend to our investors to get an umbrella policy. Typically those are written in your primary state of residence. So if you live in Florida, you'd have your Florida agent write it. If you live in Pennsylvania, you'd have your Pennsylvania agent write it. Or wherever you're and it's usually an extra 1 million to 5 million in coverage. The umbrellas, what I was talking about earlier, they have gotten a little bit more expensive and a little harder to qualify. Mostly in Florida is my guess. But it's a great added layer of coverage. It's not all that terribly expensive. And it kind of covers your whole portfolio. So for investors, it's really important to have that extra layer of coverage, which I think is kind of more what you're getting at, more so than just that primary layer of coverage on your homeowner's policy, because that's kind of like a throw in. Um, so yeah, definitely talk to your agent about, and also too, like if you have like a wealth management company or a financial advisor, those people are the best to ask in terms of what limit to select, because that can be the next question. It's, hey, is a million enough? Generally you want to ask your wealth management team, or financial advisor, say, and I can tell you, every time I've ever had someone actually do that step, they say, no, you need twice what you need. So someone will say, hey, two's
Oh,
enough. And they'll say,
interesting.
no, you need five.
Yeah.
Or, hey, one's enough. And no, you need two is generally the response I've gotten out of over the years.
It's a great tip, actually, to have your financial advisor involved. Yeah,
It's the best
I
way
know
to
that
do it.
we're at time, Charles, and you've got to head away to do something else. But is there anything else that you would like to share with everyone today? Anything that is important to know?
I mean, mostly just contact a good agent. Like, feel free to reach out to us if you have any
Mhm.
questions, about specific properties. I mean, I'll tell you in all honesty, like, if you call an agent and it's just any agent, and you're like, hey, I've got 10 properties that I want to ballpark on. No one's really got all that much time for it. So, you definitely want to be kind of concise in your efforts. If you want someone to kind of talk you through things, I mean, in general, stick to, if the property's newer, likely the insurance is going to be cheaper. If it's older, likely it's going to be more expensive. If you want to get, call around, call us, call someone to where, because I'll give you a general idea off the top of my head, about what you're going to be looking at. Some agents don't feel comfortable, aren't in tune with the market enough to do that. But just make sure you get someone that, can give you an idea of what you're looking at and point you in the right direction. And then from there, you can pick through different things. And basically, you just want an agent that has a good checklist of like, what's most critical. When you look at the property, what do we need to know? And basically, someone that kind of starts top to bottom as, hey, these are the few things that we need to know to get you the most accurate rate before you get too far involved. And just that, if you work with someone like that, you really don't have much to worry about, you know, because they're going to give you good information. They're going to be able to tell you, here's what we typically see come up in terms of issues on the insurance end. And as long as someone's kind of, guiding you through that, and holding your hand through the process, you'll be fine.
Mm-hmm.
It's just, you can't just write a policy without knowing, like, the context of the house and, the company that it's going through.
Mm-hmm.
uh, you can't guess. There has to be familiarity there between the house, the agent with the house, with the client with what they want, and with the carrier as to what they accept. So you do have to just make sure that you get with an agent that has a comprehensive list of carrier options, has been in the industry for a while. And that's really the biggie. Make sure that you can tell that they're competent as to what they're talking about when they're talking you through things. And that's kind of it. You just want to make sure you're with someone who's looking out for you in that way, and then you'll be fine because the market's getting better. Um, if you call 5 or 6 companies and they're all telling you the same thing in terms of agencies, it's probably true. You know, if they're all
Mm-hmm.
saying, hey, that's a no-go, it's probably true, but I'd call at least a handful. If you call 1 or 2 companies and they say, hey, look, they might just be a small agency that don't have many options,
Mm-hmm.
and they might just be sitting just saying, hey, you can't get that. It won't work. You can't do it. Just getting stuff off their desk. There's still some agencies that are kind of overwhelmed. So I wouldn't give up until you know, get some, get a pretty good idea of, is this truly possible or is it not? And feel free to use us as a resource, because we'll talk through anything with anyone, because the last thing you want to do is, you know, spend a bunch of money and a bunch of time on something that's never going to pan out. You know what I mean?
Yeah.
So just get on the phone with an agent, kind of talk them through, be honest. Be honest about what you have going on, what you're trying to do, what you've had in terms of insurance history, if you've had claims. Just tell them right up front. I mean, because for us, it's just that helps everybody get to the right spot fastest. And It's as simple as that. But that's kind of the best I could say for now. Um, and get
Well,
wind mitigation inspection.
yeah, absolutely. Yeah. Well, it's been so great chatting with you, Charles. I'm going to put your contact details below in the show notes. So, everyone, if you want to get in touch with Charles, you can. He's an incredible resource, especially here in Northeast Florida. And just a great person if you're in contract and you want to know how much is it going to cost, call Charles.
Yeah, yeah. Well, thanks so much for having me again. A pleasure as always. And
Yeah.
yeah, if you have any other follow-up questions or anything I can clarify, I'm happy to come on anytime.
Thanks so much. I appreciate your
Yeah.
time. We'll talk
Thank you. Have
soon.
a good day.
You
All
too.
right.
Thanks so much for joining me today. If you got something out of this video, I would love it if you could like the video and subscribe to my channel. If you are on Facebook or Instagram, you can find me there at Invest with Mindy. Thanks so much for watching, and I look forward to seeing you next time.